This is Conversations, a weekly financial podcast featuring interviews with leading investment strategists, noted technical analysts, and other key thought leaders. Brought to you by the Market Technicians Association.
Welcome to Conversations, the official MTA podcast and TV interviews for the Market Technicians Association. And we are here with a very, very good friend of mine, who came all the way from the States, Dave Steckler.
Former MTA member.
Former MTA member, who will presenting to the UK chapter about two innovative technical indicators. I will let him do the talking regarding the actual technical work. The presentation itself will be videoed and archived in the MTA UK chapter video presentation archives. And without any further ado, we'll begin with Dave. And Dave, our first classic question at the here at the UK chapter is, can you please give us some information about your educational and personal background before getting involved with technical analysis?
Educationally, I'm an attorney, non-practicing. I'm retired, 3.5 years, college graduate. I worked in commercial real estate for 6.5 years after graduating from law school, doing tax work. My area of expertise was in tax law. After the interest rate debacle of the mid-1980s in the United States, when the prime rate went to 21%, I left commercial real estate and went into the financial field, investments, as a stockbroker, and I worked in that field for 24 years. While I was working as a stockbroker, after the 1987 crash, I hadn't been in the business very long at that point, and so I didn't have that many clients to lose that much money, but I realized there has to be a way to predict this, to get a read on this. Is there a way to anticipate this? That led me to read what was available at the time in technical analysis. It was mostly Marty Zweig, his work.
Oh yeah.
And
who passed away a
couple of years ago. And then William O'Neill, Investors Business Daily, and I took it from there and ran with the ball.
Got it. So you've actually have answered my second question, is how did you get involved with technical analysis, and how did you learn the craft on your own or by studying with a teacher?
It was primarily on my own. I got into the investment field in 1987. At the time, there were only one, maybe two formal technical analysis study programs in the United States. Golden Gate University has a well-known program. There is a program at New York University. Of course, New York Institute of Finance was publishing books at that time. A few years later, I got involved with the MTA, but I was self-taught. At the time, the MTA had their level 1, level 2, level 3 programs, of course, study programs, but there really weren't classes per se, certainly not where I lived. I lived in the Midwest of the United States. There were no formal TA programs. I was completely self-taught. Most of the technicians I knew at the time were also self-taught.
Got it. And so my next question is, could you please describe us your day-to-day responsibilities and the most challenging aspect of your technical work?
My day-to-day responsibilities are right now deciding what times I want to walk my dogs. I've been retired 3.5 years. When I was working, it's hard to say what were the day-to-day responsibilities. If you can tell me what the market's going to do today, I can tell you what my responsibilities were going to do. The last 3 years I was in the business, I work as an investment advisor. It's a little different than a stockbroker, but I still incorporated technical analysis in my recommendations to clients, managing their money, etc. Day to day, it was keeping an eye on the market, keeping with the plan. One thing, and I'll be discussing this in tonight's presentation,
Yeah.
is I look for divergences between price and ... fill in the blank. Could be volume, could be this, could be that. But I found divergences to be very helpful, very predictive of future movements in the market. I don't mean in the next few hours. I wasn't dealing with people who were trading for ticks, just a few ticks on futures. These are people who are, for the most part, on stocks and ETFs. I was looking for a longer term move over the next 2 or 3 months, let's say. But if you find a divergence in a weekly chart, particularly a monthly chart, they're less useful for timing. We've got to do it in the next 30 minutes, but the yellow flag is up, the red flag is up. We need to be aware there's something going on.
Okay, which brings me to my next question, toolbox. Could you please talk about your favorite tools and techniques? Of course, you mentioned divergences. Maybe you'd like to elaborate, divergences, with which indicator do you use to locate these and any other kind of tools that you prefer?
Right now, the only money I manage is my wife's, my brother's, my own money, a few family members. So I'm still involved in watching the market every day using the analytical techniques that I've honed over the years. The two indicators I pay most attention to, that I use also for divergence as well as confirmation, is, I should say, 3. Stochastic, of course, VZO, a volume zone oscillator and price zone oscillator, which I'll be discussing tonight. And I look for, now I feel like Rick Perry. I forgot what the third one was. It'll come to me.
All right.
It'll come to me.
We'll
I've had a long day. I apologize,
Yeah,
but it'll
no.
come to me. A retracement: 38.2%, 50%, 61.8%.
Fibonacci retracement.
Thank you.
Yeah.
Fibonacci.
Yeah, got it.
I'm a technical analyst. Fibonacci retracement. I'm a big user of that.
All right. Would you like to expand maybe a bit on the construction of VZO and press oscillator? Of course, we'll be hearing more about it at the presentation, but just for the brief introduction here for the interview.
It's very difficult to give an elevator speech on VZO and PZO because it requires context. But in a nutshell, while these are oscillators, and most oscillators are only useful in non-trending markets, VZO and PZO work well in both trending and non-trending markets. What you're looking at is confirmation of divergences between price and volume. That's what both of these oscillators do. By using them together, you can use one or the other, but by using them together, you can find confirmation or divergence. By confirmation, I mean they're both going in the same direction, and volume is leading price, which is one of the basics of technical analysis, going back to Edwards and McGee, is that volume following price, if the market's going up, is bullish, if the market's going down, is bearish. But that's a confirmation. If it's just the reverse, if volume is following price, that is, price is leading volume, in an up market, watch out, because it's probably not going to remain sustainable. If it's a down market, that might be a sign that a downtrend is running out of steam, because you want volume, you want price to follow volume. Using both VZO and PZO together, as we'll see in the presentation, it's an easy way to visualize confirmation and divergence between price and volume, and those are very powerful tools.
Got it. Which have been your greatest influences? For example, if I ask you to name 3 technical analysis books that you would recommend, or 3 traders or authors, which one would this be?
John Bollinger, I won't say books, I'll just say John Bollinger. What can I say that hasn't been said by many people who stand much higher than I do? I know John personally. His work is phenomenal, very helpful. Second, and one of my earliest influences is William O'Neill. His concept of relative strength, group strength, EPS, etc., is just without compare. The third is a gentleman you may not be that familiar with. His name is Ian Woodard. Ian is an Englishman living in California for many years.
I think he's a friend of John, probably.
John Bollinger?
Yes.
Yes, he is.
Yeah,
Ian, along with a gentleman by the name of Ron Brown, are expert users of a software application called High Growth Stock Investor, developed by a company called Industry Monitors. Ian and Ron helped create, the best way to describe it is take everything Bill O'Neill did and put it on steroids and then keep going. Because Ian and Ron took it so much farther. And when you listen to Ian explain it, it is so crystal clear. And it's like, why didn't I think of that? A tremendous influence, not only on me, but on hundreds of other people as well. And not necessarily people who are technical analysts or even aspire to be technical analysts, but people who are managing their own money. And I don't want to buy an index fund. I don't want to buy an index ETF. I'd like to get out of the way of a runaway freight train. Help me. What should I look for? Ian has done that. It's tremendous, tremendous influence.
Okay, technical analysis principles. If you could distill your market knowledge within 3 actions, for example, don't fight the Fed or the trend, which ones would these be?
This is going to sound trite. Buy low, sell high.
1.
Sell rocks and buy rockets. That comes from Ian. The third one...
Relative strength, I would assume. Kind of.
Not necessarily. When you're dealing with relative strength, you get into an issue of relative performance.
Mm-hmm.
Now, if the market's down 10% and your investment is down 4%,
Mm-hmm.
your relative strength is very good. Your relative performance is very good. But at the end of the day, you're still losing money.
Mm-hmm. So that would refer to momentum.
Okay, so it's really it's a combination of momentum and relative strength.
Okay.
So we've got buy low, sell high, buy rockets, sell rocks, and the third is don't stand in the way of a runaway freight train.
Okay. Don't fight.
Don't fight the trend. Yes, that's correct, and that's where TA is enormously helpful because it helps you identify. And I'm not using the term trend from a technical analyst standpoint.
Yeah.
Trend versus non-trend, but that's why I say don't stand in the way of a runaway freight train. For example, today's action in the Dow Jones Industrial Average, which is just a waterfall, unless it changed. In the past few hours, it was a waterfall. And we've seen this coming. We didn't know when, but exactly when, but we could see it coming. And to not have been protected or done something, whether it's stops, whether it's hedging, whether it's sitting in cash, that's where TA is enormously helpful. It helps you stay out of the way of a runaway freight train.
If you could give a call to 25-year-old Dave and have a chat with him, what would you advise him? Regarding markets and life.
Thank you. Probably the same. I tell myself the 3 things that I just told you. Don't fight the trend. Buy rockets, sell rocks, and buy low and sell high. That might be my advice to me from an investment standpoint, not from a personal standpoint.
Got it. Okay, so what is your worst trade or call you've made these past few years? On what have you learned from it?
A sin that I'm guilty of, and I think most people are guilty of, is letting your emotions get in the way of what your analysis told you, predicted, use the term that you want. It's very easy to, it's gonna bottom out. Look at the action. It closed today at the upper end of the range, et cetera, et cetera, et cetera. Even though your analysis said you've got a big divergence here, or you've got a big red flag here, or the price is rising, the volume is falling, or you might have a pattern like a rising wedge after a downtrend, et cetera. And, well, I think it can go a little bit higher. All right. I think everybody's guilty of that. I know I am. To interject something slightly off key but relevant, years ago I was a pilot, an instrument-rated pilot, and one of the hard and fast rules that you're taught is when you're descending in the clouds and you reach a minimum altitude, if you don't see the runway, abort your landing and go around. But with pilots there, even professional pilots, it happens occasionally, it's called, you've got get-home-itis. If I drop just a few more feet more, I'll break out of the clouds. A few more feet more, I'll break out of the clouds. I don't want to go around again. It's late. I'm tired. And the next thing you know, you crashed your airplane. You ran into something, or you literally flew it into the ground because you couldn't see anything. It's the same thing when it comes to investing. It's not going to fall much further. Oh, look, it's bottoming out. Oh, look, oh, look, oh, look. Well, pretty soon you're looking. Meanwhile, you've lost another 30 or 40% on your stock. Because I'm guilty of this every now and then, fortunately, not as often as it was when I was younger in my career, but still, it's very hard, particularly if it's a long-term position. You don't want to sell it because you have tax consequences, if it's a taxable account, etc. But I don't care if it drops another 1 or 2 or 3%. Because I've got X percent gain and it doesn't matter. Well, that's a great way to lose a lot of money. But one way I protect myself from this is I never have too many eggs in one basket. In my portfolios, I'll never hold, one position will never be more than 3 or 4% of my total portfolio weighting. So if I don't follow my own rules to get out when strategies or the analytical techniques say to get out, and I do get burned, it's not, I don't have 50% of my portfolio in one position. So I kind of hedge myself from my own bad behavior.
Got it. What does Dave do to relax outside of market hours? Do you have any hobbies?
Train spotting. I'm a railroad photographer.
Really?
And in fact, that's why I'm here on holiday. Basically when I'm here without my wife, I'm going to train museums, do a lot of photography. Yesterday I was at the London Transport Museum. Tomorrow I'm going to the Natural History Museum in New York. But I am a contract photographer for a railroad back in Texas where I live. That's my hobby, is railroad photography.
That's very nice to hear, because I only started taking photography lessons a few months ago myself, and I found it fascinating, really.
The advantage of digital cameras is that you don't have to buy film. So you can take 5,000 pictures. It doesn't matter if they're all bad. It doesn't cost you anything.
Yeah, it's like paper trading. You can learn from your mistakes.
There you go.
Yeah, I know. In really, I think it broadened up my perception, because I was so much used to looking at charts and numbers and hard facts, and having to spot colors, perception of space and lighting and intensity.
Well,
it made me see things that wasn't before.
Let me touch on something you said. Most people are either right-brained or left-brained. Artists, and I may get this reversed, but I think artists are left-brained.
Right, yeah.
Engineers, people who deal with numbers tend to be right-brained. And it's easy to overdevelop. I know this isn't scientifically accurate, but getting it across, it's easy to overdevelop one side of your brain and the other side of your brain languishes. After so many years of dealing in numbers, technical analysis, etc., to do photography, which is essentially art, rests the right side of the brain, helps build up the left side of the brain a bit, a little more balance in the head. And I think it helps make a more well-rounded person. Strictly my opinion, but I think if you're doing photography, it'll help relax you. And let's say you're doing it on the weekend. Come Monday, your head is more clear.
Yeah.
You weren't thinking about the markets, TA, this, that, the other. You were thinking about other things, and it helps clear the mind.
Yeah, and I enjoyed it a lot, especially the aspect of it that it got me back to square one in a subject that I literally knew nothing about, and I had to learn it. So I remembered, for example, now in technical analysis, we've all picked up few things along the years, so it's tough to find something that really blows your mind and takes you back to square one. So it had a very big effect on me in terms of mentally and psychologically, trying to learn something for the first time that was completely different to what I was doing before. Okay, that's enough about me. In any case, thank you so much. I think that pretty much wraps up today's MTA podcast and interview. My name is Alex Piru, and I was here with my good friend Dave Steckler, and we'll be looking forward to his presentation, which, like we mentioned before, it will be videoed and available to enjoy at the MTA UK chapter video archives. From London, thank you very much.